Hey, in this video I'm going to teach you about the slow stochastic strategy, how it works, its strengths, its weaknesses. Then we'll look at a quick back test. Then I'll show you 1 or 2 tweaks you can do to make the indicator more interesting. All this to help you become a more educated trader and investor. I'm the Augur. I'm a stock trader and options dealer. I make videos about trading, investing, economics, and finance. If that sounds like your thing, take a second to click some buttons and help me grow. And without further blather, let's get into the fun stuff. So I've gone ahead and pulled up the slow stochastic strategy on the chart here. So the slow stochastic strategy works by running a 14th length stochastic with 2 sets of slowing on it. And it basically uses this as you would like a MACD or any other sort of moving average line where it crosses back and forth and it takes those as signal. Now it has 2 lines on it, the top and the bottom, which the indicator considers overbought and oversold. However, I take my own issues with that. But for as far as how this works and how the strategy is set up on TradingView, that's how it works. And to show exactly how it works, once it comes up and then there's a cross above the overbought area, it's a sell signal. And then when it comes down and it's a cross up below the oversold area, it's a buy signal. And it just keeps doing that. You can see here one of the strengths, or I guess the strength of the slow stochastic strategy. It works very well in range-bound markets because that's exactly what the stochastic's doing. It's just measuring price against itself over time. So it's going to plot similar highs and lows as the last one. And sometimes it works, sometimes it doesn't. I can see there, it definitely didn't work. There it worked, there it worked, there it didn't work. There it worked, there it worked, there it worked. So like a lot of these other bounded indicators, when you use them this way, you can see that when your wins are wins, they're, small, but you see a decent bit of them, right? And when you have losses, sometimes they're pretty significant. And that would be the weakness of the slow stochastic strategy, that oftentimes it encounters very large losses. So you'd have to build a way into your strategy to mitigate those losses. So let's take a quick look at the back test on this sample and see how the slow stochastic strategy did. To answer the question, does the slow stochastic strategy actually work? So I've gone ahead and brought up the back test for the slow stochastic strategy, and we can see quite plainly it just does not work. It just generates lots and lots of losses. To be simple, running a quick stochastic, buying the top or buying the bottom and selling the top doesn't work. But this is a 2-sided market. So when something definitely doesn't work, that implies something else. And I'll let you take your own I'll let you draw your own conclusions from that. So what's something we can add to the slow stochastic strategy to make it maybe more interesting and useful? I've gone ahead and thrown a 100 period moving average on the chart, this white line, and you can see pretty plainly what I'm about to talk about. So when the moving average is going down, indicating a downtrend, and your slow stochastic is set much faster than your moving average length, your odds of winning shorts are increased. And if you don't, you know very quickly, either by the stochastic stopping out or the moving average changing direction. This isn't an exact science, and it would be kind of difficult to make into an objective trade. You would perhaps have to build in some sort of trailing stop metric, or just a set stop metric, but something to reduce your risk, because that 100 period moving average is kind of slow, and you never know what happens in the market. Something, dramatic can happen like this, where you feel like it's going down. So you take that, well, I guess that's a bad example, but you know what I'm saying. You could get hurt by it kind of jumping up fast on you. Let's say you took this trade and it was going down and something really, really newsworthy came out. Like this could explode, and then you would need something to probably tell you, hey, get out before this goes to the freaking moon, right? That's just kind of the idea there. That's kind of just in general what I'm thinking about. It's not really part of the video, I guess. Alright, well with that, I'm going to go ahead and wrap it up, and I hope you enjoyed this one. Make sure to check out the rest of them. This format seems to be getting good reception, so I'm going to keep putting these out. Thanks for watching. I hope you enjoyed it. If you haven't already, do the clicky thing to help me out, and then check out my other technical analysis videos. And I hope you have a great one.